First time in 25 years, the U.S. has branded China as a currency manipulator. How will this complicate the trade war? And welcome to The Point, an opinion show coming to you live from Beijing. I'm Chen Lei, sitting in for Liu Xin. Global markets are still jittery after Washington seemed to expand the China-U.S. trade war into a currency war too. This after the U.S. Treasury on Monday labeled China as a currency manipulator. The Chinese yuan had just slid below the symbolic threshold of 7 against the U.S. dollar for the first time in 11 years. Beijing denounced the U.S. Treasury move as done, to quote, for no valid reason. To what degree does this escalate the trade war, just as the U.S. is set to tariff another $300 billion of Chinese goods? And how might this impact the yuan as well as the global economy? I'm joined from Washington by James Early, the CEO of Stansberry, China, and in our Beijing studio by Professor Xianfeng of Renmin University and Qinduo, a senior fellow at the Pangoal Institution. Welcome to the show, gentlemen. So let's start by talking about this manipulation designation. I'm going to ask you first, Professor Dai, what does this mean? Why does it matter?
Yeah, there is actually no commonly recognized definition of
That's the problem, right? There's
currency
so many gray areas.
Yeah, but it has a long history of allegations.
Politically motivated?
You goes all the way back to the gold standard. Between wars, the First World War and the Second World War, a whole bunch of countries that stick to the gold standard, and a whole bunch of other countries they don't. So they are accused of currency manipulation. And then you go to the Great Depression. There was competitive devaluation.
Race to the bottom.
Yeah, and then various countries accuse U.S. of currency manipulation. However, there is no common definition, and the U.S. is the only country who systematically, set out a whole bunch of criteria.
Mr. Xu, what's your take on this designation?
Well, I think as it goes for this political, decision, obviously it's a political decision. I would say out of a political consideration, for the slight dip of the value of yuan just for one trading day, and then you name it as a currency manipulator. Remember, just about 3 months ago, the report by the U.S. Treasury Department basically said that China is not manipulating its currency. Actually, China had been, in a sense, intervening to prop up the value of yuan, not to fall below 7. But this time around, it has other considerations. But so it's also under pressure. Remember the trade war.
Come in on this, James.
Yeah, I mean, I think what we're talking about here is really politics and not economics. As we just said, this movement is actually pretty small. I mean, media loves hyperbole, and I love it too. It's the greatest thing ever, right? But in real life, this is a pretty minor movement. It's not going to have a big economic difference. I think what we're talking about here is motivation, and underlying this is the fact that for the past 4 or 5 years, China has been taking action to actually prop its currency up, and the RMB might be at, I don't know, 9 to 1 were it not for that. So, you can call that manipulation, but it's obviously action to manage currency in a way that the U.S. frankly encouraged and frankly liked, and now it's just slightly going the other direction for literally a few days. So I think, again, we're talking about politics here more than economics.
So supporting the yuan, Professor Dai, when it works to the U.S.'s advantage is okay, but now that it's slid below 7, suddenly it's manipulation. Where do you see this going forward? Will there be more intervention by the two governments in the currencies?
Yeah, if you want to look at the current situation, it is part of the broader trade relationship. I mean, we talk about the currency, manipulation, all that kind of stuff, but it should put it in the context of a trade. Actually, from that sense, it is really not significant. It's almost like a war of words. Yeah.
And China has said time and time again that it won't use the yuan, the currency, as a tool in the trade war. Do you think we'll see more weakening of the yuan to negate the effect of the tariff hike?
I don't think so. Usually the accusation of, say, if the U.S. accused China of devaluing its currency, usually it's for the advantage, so-called advantage of export more stuff to other countries, let's say to the United States. But look, Chinese economy is going through this transitional period from relying on export and investment to one that's the economic growth model that more relies on the domestic consumption. For the purpose of domestic consumption, you would love to have a stronger currency, so your consumers can purchase more, can consume more, can feel more valuable about, say, the salary or monthly income. So, I mean, China is the second largest economy. Long term, a stronger yuan is serving the interests of China, not a weak yuan.
James, let's get the U.S. political perspective on this. I mean, taking the step has been an ongoing call within U.S. administrations for many years. I mean, in the last 20 years, I've been covering the Chinese economy. In fact, President Trump himself, in his 2016 campaign, vowed to brand China as such once elected. But even when the trade war was heating up in May, he resisted doing that until now. Why? Why now?
Lei, if I knew that, I could probably be a much more rich and powerful person. Trump has been to his credit, Trump has been very consistent in his policies. Since the 1980s, frankly, if you go back and look at media interviews, the only problem is the world has changed since the 1980s, and it's changed quite a bit. His whole campaign, throughout that campaign, he was talking about this currency manipulation again and again and again, even though it's simply not true. I mean, I'm forced to conclude it's basically a scorched earth type of tactic. He's just going to go hard on everything. He knows China will hate the idea of being branded a currency manipulator, even if it really can't get anywhere beyond just words. China won't like that, so he's sort of adding that into his pot with everything else. I mean, that's what I think is going on. The irony, though, is that it's not just Trump. He ironically has a little bit of support from some other people, too. Chuck Schumer, for example, the Senate minority leader. This is a guy who supposedly scored a perfect 1600 on his SAT score, and he's siding with Trump in calling China a currency manipulator. So that's something I can't figure out. That's something the data just doesn't support, but it's something that's happening anyway.
Yeah, I interviewed Chuck Schumer in 2005 when he was trying to get that famous Schumer and Graham bill passed in the U.S. So, Professor Dai, how much support do you think does Trump have in the U.S. About this, in the political circles, on this manipulator, aside from Chuck Schumer?
For one thing, it's Trump's campaign promise. He basically delivered almost everything he promised before. And this is the only issue, maybe, people are wondering why he hasn't delivered. So I agree, it's a political decision. And from political point of view, at least politically, I don't think Democrats are going to come out overwhelmingly saying you're wrong and all that stuff. You can have a 1-2.
Going hard against China is the flavor of the month.
Yeah, you can say so. Yeah.
Flavor of the month. I think politically, if you look at Washington, basically every corner in the White House, in the Congress, there's a strong anti-China sense. Basically, as long as the government is strong, is tough with China, everybody will be fine. Seems they don't have a problem with that. And also remember, Trump is already more or less in this election mode. He needs to appear to be tough on China in particular. Maybe this is not reasonable, this is not based on facts, and this is not based on reasoning or analysis, no. But this is political. I just want, I'm the president who is, who dares to be tough with China, so that will somehow, gain some points for him, obviously.
How does this make Steve Mnuchin look, James? We know that Larry Summers, former U.S. Treasury Secretary, has come out and criticized that move, naming China as a currency manipulator. I mean, in this Trump world, is it harder to stay independent in the administration and, not lose your job?
Oh, yeah, I mean, look, I would love to be Steve Mnuchin's massage therapist. I'm sure he or she's got a lot of business right now. That guy's got to be stressed. This is not a good position to be in. Steve Mnuchin's picking up a lot of slack, and you can see by his statements, I mean, he's he's trying to toe the Trump line because he has to. It's partly his job. But I think he's smarter than that, and I think he knows better than that. So, and I think to the Chinese credit, I think they probably know that as well. So they know that a lot of the people in Trump's sort of first valence level, let's say, they know what's going on, but they sort of have to toe the party line.
And what about the Chinese response, Professor Dai? You know, the PBOC coming out and clarifying its policies. Do you think investors are buying that?
I think the purpose for the PBO system is targeted at the market, as speculators. And the market listens. I mean, they pay attention to whatever the PBOC says. However, the U.S. Treasury is taking another way. You know, basically in the statement, you know, to label China as a currency manipulator. It quotes what PBOC is saying. So in that way, it kind of missounds.
But they're taking it out of context.
Yeah. So.
But still, I would say if you look at the potential damage, I would say that's damage more about to the U.S. It's about their credibility. You know, you do things as the #1 economy, the largest country. You don't do things this way, so randomly. To pick up another country and call it like a manipulator. You do an investigation,
3 months after you said
and you
it wasn't.
publish a report half of a year after careful analysis based on facts, and then you name one country or the other country as the manipulator or not. But nowadays, it's just one-day trading, slight dip, then manipulator. So I think it's very hard for them to recover their credibility. U.S. is systematically, basically, have this yardstick to naming other countries as a manipulator. I'm not sure next time around, how do they just publish such a report anymore?
So what's the upshot, James, of this labeling? I mean, where does it go? Does it go to the IMF? Does anyone come out and actually say, this is right, this is wrong? Or is this just all a bargaining chip?
Well, yeah, let me just echo the former point that I just heard about. I think that's totally true. This is a big ding to the U.S.'s credibility. Traditionally, the U.S. was the sort of the stable, mature voice at the table for all these decades, and that was important, and I think that added a lot of value to the world. And frankly, the U.S., Trump doesn't need to be saying this. I mean, there are things that he could quibble with about Chinese trade that, frankly, the Chinese side would probably agree are true and need to be addressed. They've done that. I don't think this is necessary. Now, in terms of where this goes next with the IMF, I think that's the $50 million question. The IMF itself, IMF and WTO, are the two organizations that theoretically can do something about currency manipulation. In real life, the WTO has basically no teeth, and maybe the IMF has one tooth. So even if a country is manipulating its currency, it's not likely the IMF is going to do anything about it. And I would say it's especially not likely that the IMF is going to do anything about it, considering that just last month, the IMF itself published a report saying that China is fairly valuing its currency in its own estimation. So I'm also scratching my head wondering, where does this go next?
So the IMF has one tooth, but it's at the dentist because it's changing its top management at the moment before October 4th. How do you think these two countries, China and the U.S., will try to, I guess, increase their influence with this multilateral organization? Professor Dai.
Yes, IMF, you think about the history. It's part of the Bretton Woods system. That's set up IMF to coordinate, to set up a stable international monetary system to facilitate trade. So from the very start, it is a multilateral organization. And as time goes by, as developing countries get more important, it's natural for other countries to have more say. So that's just natural. The only issue here is you get this current trend as de-globalization. You get the U.S. is trying to promote bilateral or unilateral. I think that's the only problem.
Well, it's also a bit ironic, when the U.S., if they choose to go to the IMF, remember, they do not believe in multinationalism and they practice unilateralism. Now, they somehow they ask IMF to solve this problem or WTO to solve this problem. That would be like a stark contrast to what they have been practicing. You probably people will feel more confused with the U.S. policy and their practice.
All right, so it's symbolic, it's damaging the credibility of the U.S. What next for the trade negotiations? Professor Dai?
Like what I said, right? The currency manipulation stuff, it is part of the broader trade relationship. That's why, when I look at the labeling of China as a currency manipulator, I feel it is symbolically very significant because, no country has been labeled as such in the past 25 years. But
the last time was China too.
Right, but if you just look at the labeling itself, it's nothing. Because whatever it means, the U.S. has done already, like the tariff. So that's really nothing. On the margin, there's nothing new. And so if we talk about this, eventually it goes back to the trade again.
So how do you think the yuan will perform going forward in the second half? Some institutions, for example, UBS, Societe Generale, coming up with estimates as low as 7.5.
Oh, well, I think China decided to do so partly because over the past few years, let's say, China had worked really hard to hold up the value of yuan, not to fall, not to break through the 7 so-called psychological threshold. And then, with this overriding commitment, you are somehow constraining yourself in terms of managing the exchange rate of yuan. So with this breakthrough, I think it's good. It adds some flexibility. Of course, in the past, you want to maintain a tight control of the capital outflow. And nowadays, with more flexibility, I think it serves the value of the yuan or the management of the currency very well for the PBOC. In the long term, as I said, I think China, I don't think China has any interest in devaluing the yuan to fight the trade war. But right now, the tension and the rhetoric on both sides are very strong. So I agree with Professor Dai. Ultimately, it's trade. Even you name China as a manipulator, ultimately it's about negotiation between two governments or more tariffs. But then also remember, Donald Trump, he doesn't need any excuse to add more tariffs, right? He can simply tweet it and then more tariffs.
Professor Dai, you look a little bit skeptical.
I look at this whole thing, basically from the market point of view and from academic point of view. Right, from market point of view, the value of currency is determined by money flow, the capital flow. And what is driving the capital flow eventually goes to the economy, how different economies they perform. So if you look at the current world, Europe is doing really poorly, and China is slowing down dramatically. U.S. is the only country who's performing relatively okay. Therefore, you see a relatively strong U.S. dollar. Therefore, you see weakening, of every other currency. So going forward, if for whatever reason the U.S. dollar weakening again, and you can see naturally, the RMB is going to, it's going to revalue again. So right now, a lot of driver, that's why I hate to say. I don't agree. China is manipulating the currency. It is all driven by the market forces.
The fundamentals.
Yeah. So in the future, the U.S. dollar is probably not going to stay strong, forever. If the U.S. dollar is going to weaken again, and you see appreciation of RMB. Yeah.
Do you agree with that, James? What do you see ahead for the yuan?
Yeah, I think the thing that we need to be remembering here is that the U.S. is not the only elephant in the room, so to speak, for China as it looks to its currency. It's certainly something China wants to respond to, and it certainly scared everybody, right? Because currency devaluation has been China's big nuclear economic weapon in the minds of many in the market, and we saw that in how the stock prices moved shortly after this happened. But remember, China also has its own credibility considered. You know, China also has neighboring trading partners. China also has to consider possible capital flight. That's been a big concern in recent years, and obviously, if the currency gets weaker, that becomes more of a concern. So it has many other reasons besides the U.S. just to simply want a stable currency, and I think we saw that after the first day. I mean, again, this is a small move, and I don't want to overreact, but after crossing that psychologically important 7-to-1 barrier, we did see China take some fairly clear action. I think that was a communication, not so much just a signal to the U.S., but really a communication to the global economic world that, hey, you know, we're actually trying to keep this under control, and so far we've seen that.
Okay, so Professor Dai, I've noticed that unlike in the past when the PBOC tended to act in the middle of the night and you know, didn't really communicate to the market like other central banks, last Friday it launched its own WeChat official account, and since then we've seen this steady flow of information out of the PBOC, including interviews by government officials. How do you see this in light of what's happening in terms of China needing to be more proactive in its communications about policy making?
Yeah, I think it's good. It's a good start. If you look, you know, I read a lot of U.S. Treasury reports about, you know, the semi-annual reports, for example. What the U.S. is complaining about is a lack of transparency. I mean, and you look at history, right? They always go back to history, accusing China, you know, historically, has been manipulating currency, and there's a lack of transparency and a lack of a set mechanism. Right. So, by opening up communication channel, it is showing transparency, and which is good. The only thing is, I think when we communicate, I mean, this China and the U.S. are two different cultures. So, when the two different cultures, when they communicate, they have to be careful about you know, make sure what you're saying is what you mean you're saying. I think that's the only thing we...
You mean making sure you do what you're
saying, make sure you are saying, when we use a word, and make sure what you mean is what the U.S., make sure the other side does not misunderstand you. That's basically what I'm saying.
So it's like another area for PR, right? Public relations. I think of course, for the central bank, I think you know, maintaining this consistency is also important, so people can follow you. Even the word choice, the choice of the words, probably you want to use the word you usually use, so people know what you really mean, in order to avoid any misunderstanding. But I agree with Professor Dai. You know, with more transparency is absolutely a good thing. And also, China overall, you know, many people accuse China of being bad at PR, right? I think so. Now you see PBOC stepping out to do a better job at PR, communicating with the rest of the world. I think, yeah, that's good. You know, you're agreeing to be one of the largest economy. You do to need the level of transparency, and it also serves the interests of China.
James, what do you make of the market movement so far, and looking forward? Do you think investors are starting to price in this new normal of erratic, you know, movements?
Sure. Let me just cheerlead briefly on that last point, Leigh, as well. You know, there's a quote. Alan Greenspan is a former U.S. Fed chair during the Clinton years, and a reporter was asking him, you know, Mr. Greenspan, as you know, said last time, if I understand your words. And Greenspan interrupted him and said, wait a minute, if you understood my words, then I didn't say it correctly. The U.S. itself has a history of being too cryptic in its Fed statements, and it has made a lot of progress in that. So, and that's worked, I think, pretty well for American investors. And so I do laud China in this approach. I think China is maturing in a market sense and realizing that if it wants to be at this global economic table, it sort of has to play by these rules of transparency and openness, and that does cross cultural boundaries very well. So yeah, I'm all for this. Yeah, as far as the market reaction, I think, you know, as a market person, I know how jittery and insecure investors really are inside, especially now, especially in the U.S. when everything seems to be going so well, but like we kind of have this feeling that maybe it's not. You know, but the actual economics here are small, and you know, we talked about trade earlier. Let's not forget that since this trade war started roughly 13 months ago, the trade deficit has actually widened. You know, so these tariffs aren't really having the economic effect that people thought they would. We just haven't seen a match between economics and asset prices yet. So I'm still optimistic. I'm hoping that cooler heads will prevail. So far, we haven't seen anything extreme yet. We've seen a propensity to react to potentially extreme things, but so far nothing actually extreme, and I'm happy for that.
You think so, Professor Dai?
Yeah, so far so good. I mean, the first couple of days, the market basically freaked out, and then you look at the past couple of days, and it's kind of coming down right now. But I have to agree. I mean, this whole there's a highline kind of risk, and when people look at it, they really get scared at first.
Do you buy into that theory that Trump is trying to force the Fed's hand into cutting rates more and more frequently?
He's trying.
He's trying to do lots of things.
I think he's doing that quite obviously. Basically, tweeting, saying that China is not our problem. Our problem is the Federal Reserve. So to make it really public, I think the rate cut last time, quarter point, that's not enough for him. So he says, especially after the three countries, like in Thailand, New Zealand, and the other country, basically they cut the rate and said, look, other countries are doing that, and you need to do that too. Because I think for him, what's at stake is still politics and the re-election. So he needs a strong performance of the economy, and then he can get re-elected. In particular, I mean, some say he imposed or threatened to impose extra 10% tariff of all the Chinese products as a way, basically, to force the hands of Federal Reserve to do something to cut rate more. So I think so. I think I do agree. It's really about whether the Federal Reserve they will do something under pressure, simply for the consideration of the president or for careful consideration of the economic situation.
James, do you think this currency factor will spur the Fed to cut rates more frequently?
Not at this level. I think if it gets more extreme, it would. I mean, again, I'm hoping and praying that a trade war stays a trade war and does not become a currency war. Despite the headlines, it's not yet a currency war. We just had literally one day of crossing a psychological threshold, and that's that. So, I mean, the U.S. stands alone, basically, or almost alone, in having relatively high interest rates because its economy has done relatively well. We've got a ton of debt worldwide trading at negative yields, which scares me. And if the U.S. goes lower, I mean, there's not much lower it can go before it goes negative as well. And if we have U.S. trading at negative yields, we've got massive deflation that's theoretically exported around the world. And figuring out the ramifications of that is probably above my pay grade, but I'm pretty sure it's going to be bad.
Are you praying for the same?
Yeah.
Professor Dai?
When we talk about the Federal Reserve cutting rates, the market believes so. If you look at it, there's Fed fund rates futures market. Prior to the escalation of the trade war, the probability of a September cut was basically like 60%. Now it's 100%. Yeah, so the market basically believes so. Yeah.
So it works.
Yeah.
So it might get worse.
Yeah, maybe that's as a correlation. I don't know what's the cause.
Equals.
Yeah.
Right. That's the concern, of course. Previously, we all were worried about uncertainty, and now something certain, but it's not really good, right? But look at the long term, especially the possibility of reaching a deal between the two nations seems to a lot of people. I mean, the chances are very slim. People are looking at the 2020 after the election, and of course there are reasons. For the Chinese side, we are dealing with someone who is unpredictable, who is not that reliable, who has probably more than 1 year to go, and whether you don't have that strong incentive to give up too much, right? And for President Trump, he has his own concern, like if there's a soft deal, that's not good,
Thank you so much for that fascinating discussion to all our guests. James Early in Washington, who is CEO of Stansberry China, Professor Dai Xianfeng from Renmin University, and of course Mr. Qinduo from Pangoal Institution. Thank you so much for that, and no doubt we'll be revisiting this very topic very soon on the show. I'm Chen Lei, sitting in for Liu Xin on the court.